Good morning, guys. Okay, so today I want to talk to you about the significance of the weekly candle close as well as the monthly candle close. I'm going to touch on why, I'm basically just going to go through each one of the reasons why I think they're significant, explain that in the charts, and then in doing so, we're going to be looking at Bitcoin and alt-season health to see whether that is okay. That tickles your fancy, you know what to do. Hit the like, hit the subscribe. Let's get into this. Good morning, Renee. Good morning, Dave, and everybody else joining in live. Nice to have you here. Okay, so let's talk about this real quick. This was the short that I shared with you guys, and the significance of the short is that there's a critical level, 107,600, where I want to see Bitcoin stay below in order for the short to go to our X marks the spot scenario. If and when we get there, that is when I'm going to consider swinging long the market again. This was based on the fact that the 4-hour has been trending bearish now since May and has given us no higher highs of any sort. There was supply entering the market there. It got tested. We made a low. Supply came right back at that same time, got tested. We made a lower low. And now we're sitting in that same area where supply is entering again. Drop. Will it get tested? Are we going to make a low? Is the market going to be so obvious in its fractal? I don't know. But statistically, this is what the trend is telling me. So as far as my macro views or hopes and dreams for my hodl bags, I have to understand and I have to be okay and flexible enough to understand that what if this is the beginning of the end for, alt season. Okay. All right. Remember, it's just a 4-hour time frame trend. I'm just looking at the potential possibilities. There's some opium in this as well. The market did have convincing rallies to the upside. I am, however, concerned that they got engulfed immediately. So it might be the fact that all these shorts got liquidated over the weekend. Stops got run onto. And the problem that I have with that, and why I'm saying not a breakout or attempting a breakout, is that every time one of those liquidation events occurs, price immediately traded below that pivotal support area. And we did that again during the night, closing below that area. So it is at this stage, Bitcoin is very reluctant to what is happening here. So with all this being said and done, that's why I think we need to have a look at the bigger views. Okay, and it being monthly candle close day, I think that this is significant for us. So monthly candle close is significant for various reasons. Volatility, psychological impact that it has, some technical analysis, advantages that it gives you. Institutional traders make decisions on the monthly candle close. So that is, in the end of the day, when they're going to decide, are they going to try and push price higher or no? So we're going to look at that, as well as, support and resistance levels and long-term trend confirmation, as this is critical to our bias for our hodl and our larger time frame swings. And what I mean by that is this 4-hour short that we're talking about. Let's just go to this 4-hour again, different chart, same thing. Okay, this 4-hour bias. If it wasn't for the monthly and the larger time frames, I wouldn't even been in this short. Okay, in that regard. Okay, so just keep that in mind. So the bigger macro bias does impact what we see. Okay, so let's start off. Tickle your fancy, Dennis. Tell you if that does, hit me a like, give me a subscribe, and share with a friend. Let's help grow the community. Okay. Bitcoin on the monthly from long-term trend confirmations. Okay, so other than that, it's giving us a real macro outlook. It's going to help us confirm our bias towards the market. So I'm going to try and be as unopinionated as I possibly can while doing this. So bear with me. Okay. So when we're looking at long-term trend relations, there's a few things. We need to study the way the market is moving. Okay. Meaning that this impact, let's use the last time we had a larger time frame reversal. We can even use the bottom. When you have the monthlies getting bigger in body, okay, and in highs to lows, that is signaling that the momentum is getting stronger and stronger and stronger. But as soon as you have a monthly that fails to open a new higher high on the monthly, that is when you need to start questioning, because things that go up, guys. There's no room for complacency in this analysis. Things that go up keep on going up. Look at that. Higher high, higher high, higher high, higher, higher, higher. So this is the first month where we couldn't hold previous month highs. That raised the question. Okay, so that is the significance of this. So if we take this information now, we say to ourselves, okay, what will be our bias if this monthly candle closes above, say, 102? We can still be long-term bullish, because what do we have? We've got divergence living between those two. Strong bearish divergence. But we don't want to lose any critical support areas. So 102 on the monthly, between 104 where we are on the weekly, 102 on the monthly, this becomes an area where it's a dodgy zone. It's negotiations are busy happening there. The market is trying to decipher whether it wants to continue on higher. So long-term trend, that is something we need to keep in mind. Another thing on the long-term trend is when we have candles getting bigger, 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 at some stage that dynamic flips. What do I mean by that? If the biggest candle is the candle in the opposite direction within your wavelength, that is telling you that, hey, listen, things are changing. Okay, so what do we have here? Whenever have we made a bigger white candle than blue candles, for that matter? We've had one massive one here, but it's now took 3 candles for us to re-engulf that. So is that signs of health, or is that signs of the market is looking for more buyers to buy the top so that it can vacate itself? Remember, they need a lot. If they own millions of the stuff, they can't just sell to one random guy on the street. They need to sell to a lot of random guys. So they will keep on propping up price. And that is what the divergence is. So as long as they prop up price, we can benefit with price propping up, moving on higher. But at the end of the day, momentum clearly has gone. So our long-term confirmation bias still remains in. We're bullish, but momentum has gone. Now, another thing that the monthly candle close is going to give us on that is really significant is when we look at our support and resistance levels. Now, I've drawn this out for you guys just to save some time. Support and resistance levels, simplest way is you use the RSI to highlight critical events. Why? Because the RSI is a leading indicator. It would have notified everybody of that immediately. Okay, so critical events, there's critical events. Okay. Critical events. And then you put your support and your resistance lines on top of those areas. So that's where they met up. So when we look at this from a purely support resistance range, you can see that once price in the future came back to 57, it was resistance for that matter, because that's when the trend said no more. Okay. And it had to turn that into support. So every time we fell below 57 on the monthly candle, we brought the price right back up and closed there. So you do have monthly overlaps building a base. You see the wick overlap? Building a base in that danger zone to try and push on higher. So what we have right now where price is living at this stage is we've got price attempting to do just that. So we've had a massive reversal in that area with a bearish, I won't say engulfing candle because it didn't engulf the entire structure, but a massive bearish candle at that stage. Now we have a situation where if the monthly closes as is right now, the expectation is that we will probably go and wick back down into these ranges again until the market decides either this remains as support or defines that we're going to be trending lower and then move on. So on the trend from a support resistance area, you have to say that the previous analysis saying that the market's losing momentum is clearly there. And we do have critical support and resistance levels that we need to keep an eye on in order for us to kind of remain bullish, giving the market the benefit of the doubt. Okay. Then the third thing that we need to do, that I said we're going to look at, is the technical analysis side of things, multi-timeframe analysis. And that is what I do here in the Discord. Now, you're more than welcome to join me in my Discord. It has been slow. Since the alts have been, it's a quiet place. I have to say, even the guys that's in there, they're so quiet. So now's the time to be at it, guys. Now's the time to be active. Join the Discord, okay? And you can do that with opening a BloFin account. Links in the video description, guys. It's as simple as that. Make sure that when you do open your BloFin account, you do have the Crypto EMC referral code. Then you go to my Discord and you go to the navigation channel. You ask for the partner role, the BloFin role, and I will assign that role to you, and it's going to unlock a lot of what I'm doing in the Discord for you. Okay, right. Now, back to the chart. So what I mean by multi-timeframe analysis, in the Discord, in the mornings, I do market tactics videos where I basically look at all the multi-timeframe levels of Bitcoin, and this gets timestamps, gives you an idea of what is cooking, when it's cooking, and keeps you on top of things, basically. Okay, so you get access to that and a lot more. So looking at this multi-timeframe analysis, this brings me to where we were on the weekly timeframe. So last night I dropped a tweet. I said, guys, this is really serious, very significant that we need to think about the weekly timeframe, because the fractal that Bitcoin has on the weekly point is, if we have divergence, we ignore the divergence. We ignore the divergence unless we fall below that divergence creating pivot, which is, for this instance, there's your first divergence. We never fell below that point there. So it's not something to take, be too serious about. And then we had this one. If we fall below that one, that's the worry we have. Okay. So take this now to, well, let's zoom in. Let's zoom in. This is a weekly time frame. Let's maybe spend a few minutes on it. Price can wick through it, but if you start closing, open and closing below it, it's kind of over. So you have to worry about that. Okay. So where we are now, we're fighting this fight. So let's move into where we are there. So there's the area. And the worry was that the weekly closes at 104. Then it means we have lost support. The fact that we're here now means we haven't lost support, but it tells me from a weekly point of view, make ready, there's going to be a lot more chop coming our way. Now, chop is horrible for traders because the market doesn't make sense. Your trade setup, it runs to your stop, then turns around, runs to your stop, then turns around. So it means that we're probably going to be in for a little bit more of this before the market decides what it wants to do. Okay, daily time frame has been suffering to this. So I said to you guys last week, be bullish at the bottom of the range, be bearish at the top of the range. This was there. So it's range bound. It's going to keep on doing this. So be bearish. And then when you're in the chop area, understand that the market is going to hurt you. It's going to take your stops a lot. So either don't trade the chop, or when you do trade the chop, make sure you've got wider stops in that for that current setup. Okay. Then 4-hour time frame, as I've touched around with the multi-time frame analysis, means that we're trending bearish still. And even the 4-hour on this higher high is giving us yet again more strong bearish divergence. And here's the catch. We're falling below the regional pivots. Okay, so the thou shall not cross line, which means this 4-hour is in supply and it's giving you strong bearish divergence. Let's say it fails. The odds that it's going to go to 105-ish before it fails is statistically so much higher so than to say that it's just going to keep running from here. It's a possibility, but really so. Okay, and then from that point onwards, you move this into the 15-minute time frame. Now, earlier, if you do have a BloFin account, you also get access to my buddy indicator. That's the simplest tool out there you can use. There, it gave you the sell zone. Sadly enough, price didn't pull back into 107, 800s for the sell, and it's now already past TP1. So that's a missed entry. Something interesting that I found with a buddy indicator, and this was just by accident, never engineered to do this. If you take the indicator and you take away all the trade setups, and you just enter when the candles turn blue, enter when the candles turn orange, enter when the candles turn blue, into when the candles, it almost functions a lot like a moving average. The only problem that it has is, when you're in range-bound environments, it's going to keep on chopping up. So you might lose a little bit there. But on the longer run, once you're in that entry that moves, I mean, it is pretty accurate of holding on to a bullish trend for as long as possible. So I have to say that is something that I'm at this stage with the indicator, I'm exploring and seeing how I can turn this into a trend or a trade setup, because it is something very powerful and it's a happy accident. It's not something that what was engineered for. So by this definition, it is saying, say bearish, say bullish, but I mean, if I can figure out a way to enter closer to when it does, because that's when the candle got locked in orange, we'll be able to turn this into a setup. So if you want the indicator as well, you know what you do. You need to do, get your BloFin account. Okay. Now let's get back to point, guys. So multi-timeframe analysis. Weekly time frame, we kind of need to stay above 104. Daily time frame, we range bound, so expect the market to chop around. 4-hour candles market's still bearish, so the 4-hour swing short is still good. Okay, 15-minute is so small that what I say now in 1 hour's time wouldn't matter. So that's why I don't spend time doing that on a YouTube channel for you guys. And then back to our monthly and the significance of the monthly. The next thing we need to do is think about the institutions. So the institutions make decisions on this as well. And the way that they do that is by considering higher highs. It's almost the simplest way to look at that. A monthly that keeps on making higher highs is a healthy monthly, and they're going to keep adding to their positions on that. But a monthly that fails to make a higher high is when they might consider shorting the market. And that doesn't mean they sell their spot, but it means they bring in a lot of more supply on the paper side of things. And that is a way of manipulating the price of an item. Okay, so we'll talk about, it's highly manipulated. Yes, it's your friend. And it means that if this monthly doesn't close above 111, or at least just gives us a higher high, the odds that the next month is going to do that becomes increasingly smaller. And it means that these institutional players might now turn around and say, hey, maybe this is all the juice we're going to get out of this one. Let's squeeze in a new, and let's consider going short, meaning they will increase their short positions and then use a bear trend to ladder themselves out of their long profit, taking that money to build a short so they can trade it down. And that's what I do within my Prime XBT account as well, this long swing short. I mean, it's sitting in with around $7,000 in drawdown. I'm not too concerned. I mean, at one stage I was like 30, 45,000 in profit. I'm just hedging the uncertainty. That's all I'm doing, just hedging the uncertainty. It's not a trade yet, because if the market does break down and, we've got losing momentum, we lose critical support levels, 102, 96 days, critical levels, then that position, I will ride that thing all the way back down to wherever it wants to go and add onto it while letting go of my spot. Now, I'm just going to stop the stream right here and say, guys, this is not financial advice. I trade for a living, and I just share what I'm doing here for an educational purposes. Do your own research, look at your own portfolio and your own risk appetite. Make sure that you do adjust that, okay? And as always, I'm in the Discord, and there I can spend way more time discussing ideas and theories with you, okay? Let's see what else we got new. Samu, good day. Thanks for joining. Guys, let me know you're awake still, because I'm going through these points quite fast. So say hi. Come on. Let's get a 777 going in the chat. Lucky number 777. Today is monthly close day. So it's like trader's birthday. Okay, so there we go. Go on. Let me know you guys are here. Now, historical context is probably the last thing that let's finish off on institutional decisions. So what we have got going here is the higher high is a problem. We don't have one. And if the market decides to turn this monthly, which is in a day's time, into a doji, meaning it sells all the way back down, it means that nobody is sure that this is going to continue on higher. It doesn't mean that it won't. It means that nobody's sure. And the last time we had dojis, the critical thing is then it cements in a range-bound environment, and then long players, institutional players, will only back price again once we break through that doji price. That's why that got tested there. It's no coincidence. This is where they spent their money to get in the market, and this is where they will add to their positions to defend their longs. Doesn't mean they didn't take shorts there. They play both sides of the market. But the idea was just to defend their longs and then continue onwards. So if this ends up turning into a doji, guys, that's something worth noting. There was another doji. Price entered that market. Look what it did. This is where they defended themselves. Okay. So if you want to see a doji, it doesn't mean that you need to then act immediately or FOMO in. Let's say there is a doji and price decides to go down. We will come back to the extreme of this wick or the extreme of that wick in the future, and then we act in whichever direction is going to be appropriate. Okay. Now let's recap this. Before I do that, I'll go over to your comments, see if there's anything, any questions, and then we'll talk to alt season a bit. Okay. Let's see what Selena has to say. 97, first week of July, then rip. Well, Selena, I'm going to keep my fingers crossed for you. I hope so, for two reasons. My short will look good at 97, and I can keep on laddering in and buying some altcoins on the way down, so that if that happens, I can make some good money. Now, I've shared a couple of coins with you guys, and the coin that I want to talk to you about most is Soon. We spoke about Soon a little bit earlier, so let's do this Soon. So when Soon launched, I explained to the guys that this thing is turning trend around. This is now done in the Discord, and that a 21 cent buy is critical and healthy. So Soon did just that, went to that 22 cents, gave us a really good buy. And at this stage, we had a nice reaction. The market is testing that 22 cents. And where we're going now is, let's just go to the BloFin coins. There, BloFin coins. And if we look at Soon right now, you can clearly see that we had more shakeout, more range being built within this area, and that there is a downtrend or a wedge, whatever pattern. And we do have weak, but ever so much so, hidden bullish divergence. So Soon fills the gap at 22. I don't think there's going to be a lot more time left for Soon in this range, and then it's going to start marking itself up. Now, as a rule, always goes with these kind of launch wicks, guys. Critical area of resistance would be the first line. Now, you've seen this many times. You should be aware of this. Once price loses a range like that, it's going to find a way to get back to that before it goes either higher, turns this into a banana coin, or keeps on rejecting. And all of this can happen within this week while Bitcoin still tries to decide what it wants to do. So don't let your Bitcoin sentiment dictate the way you look at your altcoins too much. Okay, especially these new ones. They don't have the emotional market cycle maturity yet to be in harmony with the rest of the market. There's still fresh money and hope in here. They move on their own accord slightly, so keep that in the back of your head. Now, there's more of these coins. I shared them in the Discord. If you want your hands on them, you know what to do. Okay. Right, guys. Thanks so much. I think that's everything for me for today. So let's sum up the day real quick. Okay. Monthly candle is significant because it tells us where the volatility is going. So momentum is losing. Okay. We've got crazy wicks. And if we close below this area here, we don't have a higher high as well. And then this basically then tells us that we need to start expecting the market to be more choppy. Okay. From a psychological impact, major monthly levels, candles and closes create resistance barriers. So another thing just to add is $100,000 is a psychological level, it's a support area. 110 is a psychological support, or is a resistance area now. So with that being said, these areas, 100, 110, is probably where the market will want to try and chop and only really establish a new trend once we move past that. Technical analysis wise, we do use the monthly in conjunction with the weekly time frame, which is significant. We need to stay above 104 for continuation. And then we also use this thing to ladder into smaller timeframes just to increase and help us gain perspective of our bias. Otherwise, we're going to get narrow analysis paralysis, meaning if you zoomed in on the 5-minute on this coin, on Bitcoin, and you're looking at this, it's like, oh shit, this thing is falling to the floor. But if you then move over to the 15-minute, we can say, well, look at this. We are creating hidden bullish divergence. We're not making a lower low. Maybe it's not that crazy. Maybe it's just the market looking for liquidity. And i.e. the same, you scale this to a 4-hour time frame, and you're saying, but why? You can clearly see we are liquidity grabbing at the moment. So the nature of the 15-minute and the 5-minute now makes sense because we're in that zone. Does this then mean that the buy, even if it goes in profit, will be good? No, it won't probably be, because we need to sweep out all the old liquidity before the market can move in any case for being longs and being shorts and so forth. You get the idea. Then institutions make decisions based on this. The reason for that is very simple. These higher time frame biases These are areas. Institutions like to buy into strength. They'll keep adding onto it until it shows weakness. This shows momentum is lost. We've failed to make a higher high for forever. And once we do fail to make higher high on the monthlies, the market has proven to us that it will give us a correction. And this then takes the blind bullish analysis or narrative off the table for us. Okay. And then obviously the historical context. Lose these levels, 971 even for that matter, in the future might look like a good support area. It's too soon to tell. We will take it level by level, but just worth noting. Okay. And then the fractal play, as always, weekly time frame. I've marked it out the best. So just as a kind reminder, guys, from a fractal point of view, oops, there you have it. Once we're in this environment, let's bring in the RSI. The alts fired off. The alts were bullish. In this leg, the alts were extremely bullish. So it might be that the alts remain bullish and Bitcoin does make another one. People need to say, fuck it, what this guy is saying is BS. Then it's bull market top. If there's still some of you guys that say, I think I can kind of buy his idea of what is happening, then it probably won't happen. Because tops, when we were tops, when I gave stuff like that at tops, people said, screw you, I hate you, and I'll come for your family. It's this bullish market for all these various reasons, and we're not there yet. Okay, so that's also why, from a psychological point of view, I still have a little bit of faith in there. Everybody's not convincingly on one side of the market yet. There you have it. Okay, guys, thanks so much for taking time. Have a lovely day, and I'll see you. Cheers.